minus 5 from Fifth Third, so 33. Is that about right? And was the 5 with interest? Or was that just a flat-out grant? Free money to get it going. Cool.
You're saying it was a grant from Fifth Third?
The $5 million was. It's like a little less than 5.
Well, there was a conventional loan from Fifth Third as well, right?
The entire thing is not a loan. I apologize. I don't remember off the top of my head. But yes, there is part of this is a debt structure where there is one of it is a loan from Fifth Third.
It's a conventional loan.
Conventional loan that they're making interest.
And that might be part of the $38 million.
Yeah, it is.
Oh, okay.
I just don't know off the top of my head what the breakdown of all those loans. There's a conventional loan from Fifth Third. There is a New Markets tax credit from ECDC that we operate, a loan from the Cincinnati Equity Fund, and then a loan from the state of Ohio. But then also the plan is at some point we need to refinance everything. All those other loans have certain dates where they end. They aren't long-term lending. And so at some point we'll have to refinance. We'll probably go into some sort of conventional lending mechanism also.
And have you guys made predictions of how much revenue you expect the garage to bring in annually for you? I know we know that the city was around 750 or whatever, new rate structure. So I mean, hopefully you're ambitious. It's going to bring more.
We do have. I have no idea what they are
off the top of your head.
Yeah, we have run some numbers.
Okay. So loan is 40 years unless you get paid earlier.
Yeah.
Correct. I mean,
is that right?
The loan currently we do not have a loan that is at 40 years.
Okay.
But
the lease for the city's deal with 3CDC is 40 years.
The city deal is 40 years or whenever the debt is paid off. If we have not paid the debt off in year 40, it's too bad, and the city gets the garage back
And the debt?
we have to deal with the debt.
Well, hopefully they'll give you a credit.
Well, with guaranteed revenue, it's kind of a no-lose for you guys, right?
I hope it's a no-lose for everybody.
Why didn't you guys just come out and say it was going to cost $33 million of taxpayer dollars instead of saying it was going to be $4 million and the rest was from private investment?
I remember when I was working through it. I think that's how we explained it to council when I was at the city. Explaining this is how the deal structure is.
And I'm new to the market in the area, but when I was looking at it, I was thinking $4 million is what I already heard, and 38 was private. So I didn't get the feel that the city was putting money towards it. And I realized it's not a cash outlay. It's over time the city lost revenue to go towards that. But at the end of the day, isn't it city money that's going out to the tune of $33 million?
Actually more, but yeah.
Give or take.
Well, because for one thing, I've read in the Business Courier estimates as high as 1.8 million was what the annual revenue from the garage was. But obviously, whatever you guys raised,
that probably was the
money that comes in without expenses.
I honestly can't remember the numbers. That was probably the revenue, and then if you net out the expenses, it's probably closer to $750,000 what the city actually.
Right, but with raised revenue, right? I mean, with the raised revenue, it's going to be at least $33 million, but could be as high as $100 million, right?
Not that we would bring it.
No, I'm talking about the revenue from the garage, right? And you're the first real reporter in this city to ask this question, because I think it's interesting that Margaret Buchanan is the president of the Enquirer and also on the board and does PR for 3CDC. So you have these glowing reviews, and it's going to only cost $4 million from the city, but the truth is that it's going to cost a lot more than $4 million. And so I think that the public has been misled. And so my question to you is, where's the public oversight? Who's looking out for the citizen? I mean, should we just, obviously we haven't been told the whole truth on the numbers. So who's looking out for our interests?
I see that we haven't been told the whole truth. I think
did you guys tell everybody that's going to cost the citizens at least $33 million?
That's the way I recall explaining it to city council when we sat in front of people and explained the deal. So we're taking this.
It doesn't say on your website.
42.7.
Well, that's
42 million in private investment is what they say, and only 4 million coming from the city is what they say. It's what your website says, and it's what, in fact, the Enquirer reported, and what the media has been covering up until you are a good reporter.
Well, and that's why I just wanted to ask the question, because it sounds like it is that money, but I realize it's not a cash outlay. It's revenue the city would have had to go back only into parking products. Now, in fact, that revenue goes to the $38 million debt. to build Fountain Square.
Correct.
Which is a great catalyst, I think many people agree, because you got 50 million and everything else. But shouldn't Joe Smith, who pays his taxes, be able to say, okay, our money, about 33 million, is going to go towards the project? And on the website, it was a little misleading because it does say 38 million private, 4 million public. Yeah. Does that seem misleading the way it was laid out?
I don't see it that way. I think it was a pretty honest assessment of what we're putting into this.
It's honest to say the citizens are paying, the city is paying $4 million, but the reality is it's at least 33 million. That seems honest to you?
I think it's an accurate assumption of how an accurate statement of how we are financing this. And you have to take into account go to any private real estate development and say, well, how would you structure this? If this had nothing to do with city, government, public, private, there's a garage making so much revenue. How would you put that real estate deal together? And that's really what we looked at and we said, this is the net operating income of it. Put a 10 cap on it, which is a financial mechanism of looking what that's worth. If you had an office building, someone wanted to buy, they'd look at what are all the leases, how much money do you make off the leases? If I'm going to pay you something today for that, what would I pay you? And that's what we figured out. I'll pay the city $7.5 million up front for the right to get that revenue for the next, in our case, up to 40 years. So,
and of course, the way this works is that there's banking. Thanks a lot, Chad. I'll have some more questions.